Hello and welcome to another update video about Natgas. Natgas has moved a little higher since the last video. That was so far in line with expectations. It's forming, in my opinion, a little bit of a bear flag down here. So from a technical point of view, that would rather suggest trend continuation lower, which is also exactly what I forecasted last time. Yeah, that this is primarily only a corrective rally with one more low to come. I would still like to see one more low, but don't forget where we come from. Never forget the bigger picture. I mean, throughout basically the entire year, April, May, June, July, we expected a little higher in a wave 4 correction, but then eventually one more low, okay? One more low, which happened. And now literally we have formed that low, that additional low. But within this structure, again, looking at the micro level, one more low is still a very reasonable interpretation. Before, however, a larger trend reversal should occur. So really looking at this structure here, if we zoom in a little bit, my assumption is still that a fourth wave peaked here in August, which was here on the 15th of August. Fourth wave peaked. And then within this fifth wave, we obviously like to see 5 waves down to get a very clear and clean structure. That could indeed complete this entire correction, which started in June last year. So it would be a substantial low and a major turning point potentially for a rally to new highs. So it's going to be interesting. Yeah, I think we are, very, very close to a very, very substantial low. And yeah, we might get one more low, which is the expectation at the moment until the market breaks above resistance in an impulsive fashion. But, if it turns early, it turns early. It's all about scale. Understand that there is quite a lot of long-term potential to the upside, in my opinion. But at the moment, there is no bottoming structure that convinces me. So if we zoom in a little bit, the idea in this fifth wave is that we only completed 3 waves down so far. We had a wave 1 of 5, which bottomed in October, early October. Wave 2. Wave 3 might have bottomed. This is likely wave 4 with one more low to come in wave 5. And now it's time to zoom in, go to the 1-hour chart, try to understand the microstructure. What I will also do is I will hide the volume down there. Yep. Yeah, and this is still the structure we discussed last time, right? My idea was that wave 3 bottomed in the support zone down there. The wave 4 would be the corrective rally that we want to see. The wave 4 should be a 3-wave move. A wave, B wave, C wave. And I gave you some key targets for that C wave. And they were calculated based on the measurement of waves A and B. So the length of wave A often correlates with the length of wave C. So we have an A wave, should have topped topped here. Then the B wave pullback, and then we measure the C wave. And we have a target range between $2.75 and $2.97. Ideally, the wave 4 would not stretch above it. It can do, but ideally this is going to, at least it's a key target range here. Ideally, we see a rejection there. Now, that's the Fibonacci extension target range. There are also standard resistances all the way up to $3.11. So really only for me, a sustained break above $3.11 is required to suggest that a more lasting low is already established. Until then, this could all be wave 4, okay? But first of all, the more immediate targets are listed here. $2.75, so $2.75, $2.83, $2.89, $2.93, and $2.97. Diving even more into the microstructure, this is where it gets very messy then. But it looks to me as if within this C wave of wave 4, we completed a wave 1, 2. This is an A, B, C in wave 3. 4 might be unfolding right now, and one more high to come in wave 5, which would also be an ABC structure. So basically, I understand the C wave as an ending diagonal, which is made up of corrective structures. This can easily change its structure again. Ideally, to keep going high, to keep going higher in the short term, the price should ideally stay above $2.45, the last swing low. A break below that level, in my opinion, would indicate that we're already coming down and that we already got rejected. I mean, it's moved into resistance, yeah, but it would have been a very, very shallow wave for then. Yeah, so at the moment, this is purely seen as corrective move up, and yeah, essentially one more low is expected. Maybe it stretches a little higher. That would be ideal when I look at the microstructure, but overall, a break below that last swing low would indicate that we're already coming down. Also, you can use this sort of trend channel as guidance. Looks a bit like an ascending wedge pattern. Looks a bit like, yeah, a bear flag basically. And if we then make another low, the support down there is at $2.12. And then we've got $1.88 as next levels to watch, but I can specify that further once we have a confirmed top in place here. That's my update about Natgas. Hope you will like the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our stocks and S&P 500 service. You can find the link in the description. Thanks a lot for watching. Bye-bye.